What is going on, investors? Hopefully you guys are having a great day out there. Probably better if you don't own FuelCell Energy, which is down about 5% today. But over the last month, this stock is down 35%. Now, if you've been a viewer of the channel, about a month ago, I predicted that FuelCell and PlugPower would likely crash in price, and I will walk you through exactly why that is, what kind of red flags you can look for in these types of company. Now, that's not to mean that this stock can't bounce back, can't go back up, but boy, if you bought up here in the $20 per share, you're feeling it pretty bad since the stock is down here at 16. And there's been a lot of stocks that and sectors that have been performing very well over the last month or so. So FuelCell reported their earnings today, and it was bad. So they had a large Q1 loss, their revenue missed. It's a company that has a pretty inflated valuation at $5.8 billion market cap. Red flag number one is I just do a max chart. This company has been around a really long time, and you see really since about 2010, 2012, the stock is basically just kind of flatlined, okay? It's really flatlined over the last several years. That is a red flag. Can they bounce back? You see this big volume down here. Can a stock like this bounce back? Sure, but when you've been around this long, it is difficult to do. Now, the other red flag that I see here with FuelCell and with PlugPower, and honestly, when you read the comments on my channel, people don't understand the difference between a gross profit and a loss from operations. So let me explain this. So we've got revenues up here at the top, and we've got 20 over 21. This is for 3 months ended for FuelCell. And we see here on the product side, they have no revenue on the product side. Not necessarily that bad, because look, they do have some service and license. They have this generation, and they have advanced technology. They ended up the revenues went down. So that was the first thing that had investors not feeling very good, is we went from $16 million in revenue down to about, we'll call that $14.9 million in total revenue. That's not the full story. Here's what I want to show you. Okay, on the product side, I showed you we had zero revenues here in the quarter, but we spent $2.3 million. So we had no revenue, but we still had to pay $2.3 million to generate no revenue. Now, here's where it gets even worse. So here's our service and license. We made $4.9 million, but guess what? We spent $5 million. Here's our generation right here. We spent 7.1 to make 4.8. Yeah. So think about this. If your kids had a lemonade stand out front and they were making the lemonade for 50 cents and selling it for a quarter, you'd probably have a conversation about gross profit. And that's kind of what we're seeing here. And we see here advanced technologies, they were profitable on this end. You spent 3.9 to make 5. So you made about $1 million there. So that our total revenues here came at 14.8 million. Our total cost just to get these revenues, okay, that's not administrative expenses. That's not R&D expenses. We'll get to those in a minute. Total cost just to get this revenue was $18.5 million to generate 14.9. They are losing money selling the product. This is why when people come onto my channel and talk about, oh, FuelCell and PlugPower partnered with this company or Amazon or Walmart, guys, the CEOs and executives at Walmart and Amazon are not stupid. They are looking at these numbers just like you and I are and saying, hey, this company is giving away their product at a loss. Maybe we should partner with them and get some cheap product, get some cheap fuel. That is exactly what is happening to these companies, is other major companies are partnering with them because guess what? They're giving their product away for free, basically. So we come down here, we got a gross profit at negative 3.6 million. Okay, we're actually a positive 3.2 million. So it's really turned negative in terms of gross profit. That is a huge red flag. When you are not profitable from a gross perspective, again, this is like having a lemonade stand where you're making the lemonade for 50 cents and selling it for 25 cents. It is not good, okay? Now, operating expenses, we're not factoring in these either. So we've got our administrative expenses. Those went from 5.2 million up to about 9 million. And then we've got research and development expenses that came in from 1.1 up to 1.8. Total costs down here are at $10.7 million. So we spent $10.7 million. plus this 18 million minus 14, and we get a loss from operations here at $14.3 million. Now, having a loss from operations, in my opinion, not nearly as criminal as having a gross profit loss. In my opinion, this is not my opinion, this is a rule that I have as an investor. I never, ever invest in companies that have a negative gross profit. I don't care what the stock chart looks like. I don't care how much hype this is getting on blogs or social media or YouTube. I will never, ever, ever buy a company that has negative gross profit because they are selling their product at a loss. Now, loss from operations, different story. Sometimes you have administrative and R&D expenses that are exceeding your revenue, but if your revenue is growing, you will grow into these costs. We're seeing here, we're actually declining revenue, gross profit is accelerating, and our loss from operations obviously accelerating as well. Just an absolute disaster when you come look at this company from a fundamental perspective. Now, from a balance sheet perspective, not too bad. Basically a sideways quarter in terms of assets here. We went from 233 up to 278 on the total current asset side. They do have a fair amount of cash here. That's $178 million worth of cash. They've got a little bit of restricted. They've got some receivables. They've got some inventory. Inventory stacking up a little bit, not necessarily that good. When you have declining sales like they are here, having inventory stack up like it did in the quarter, not necessarily a good thing. So sometimes even though something's on the asset side of the balance sheet, not always a positive. Now, from the liability perspective, they've cleaned some things up. It looks like some preferred stock or some stock obligations got taken off the books. So their total liabilities actually went down quite a bit, but they do have a little bit of debt. They've paid that off as well. They've likely done this by raising money through issuing, obviously, stock options, different types of things like that has allowed them, preferred stock has allowed them to clean up the balance sheet in a little bit. But from a fundamental perspective, this company is an absolute disaster. I would avoid stocks, not only this one, but stocks like this at all costs. Now, stock's been in a defined downtrend, and it did actually kind of a peak up above, and we've kind of come down here. It wouldn't surprise me if this stock consolidates between, we'll call it about $13 up to about $18.75. 1875 has proven kind of an area that the stock has not wanted to go through. We were in this downtrend. It tried to break it, got rejected at 1875, came all the way down to about $13, came all the way back up to about 1865 or so, and it's on its way back down. Wouldn't surprise me if we consolidate in this box. So could there be some trading opportunities here? If you like the technicals of this stock, when we're looking at this chart, sure, the 50-day moving average is still positive. You're still well above it, those types of things. But from a fundamental perspective, where you have negative gross profit, they're literally giving their product away for free. They have declining revenues and obviously increasing losses from operations. And on top of that, you have a $5 billion valuation on a company that has been around a very long time and just simply has not figured things out. I don't think any subsidies, any administration, any politics, any government, any company is going to be able to bail a stock like this out. It will likely just continue to go down. And if you hold a stock like this, you will likely not be rewarded. So, hopefully I didn't eviscerate this company that bad, but look, I warned you guys a month ago. I said that these stocks were a negative, and I showed you on today's video exactly why. Look, if these were reversed, I'd be singing this company's praises, but we got to tell the truth on a channel like this, and it might be the hard truth for some of you that might have bought a stock like this. So hopefully you guys enjoyed this video. Maybe the next company we review will be in better shape. Good luck with your investments.